Okay, so we're allowing everyone in.
What's up, Norm?
Hi, everyone. Thank you for joining us today. I'm Olivia Morikawa with Fidelity Hawaii Connects. We have a great commercial panel. This is commercial number 2. So we're going to start off by having everybody introduce themselves. So I'm going to have Mark start first. Mark Ambard.
Thank you. I'm Mark Ambard from Ambard & Company, Commercial Real Estate. I'm a CCM. I'm also the moderator today. Hopefully I don't have to do much, and these guys all talk to each other, and we get a great group of information. It's a very intelligent group of people. I'm looking forward to being involved with them. Aloha.
Okay, Jay Elicker.
Morning, everybody. Thank you for joining us. Excited to be here. I'm an industrial broker with Commercial Asset Advisors. Been in the business 16, going on 17 years now. Thank you.
Awesome. Okay, Sean Tadaki.
Hey, good morning, guys. Sean Tadaki here, managing partner for Commercial Asset Advisors, specializing in office and the healthcare sector for over 25 years.
Okay, nice, Sean. Roger Lyons.
Hello, everyone. My name is Roger Lyons. I'm a partner at the Beall Corporation. I'll be speaking on the shopping center industry in the Hawaii market, and I've been in the business now for 32 years.
Hey, Nathan Okubo.
Morning, everybody. Nathan Okubo. I'm a real estate attorney at Cades Schutte. I'm a partner there. Been practicing for about 14 years and look forward to talking with all of you.
Awesome. Scott Rodie.
Morning, everybody, and welcome. I'm Scott Rodie. I'm the Chief Appraiser and Environmental Risk Manager for Bank of Hawaii's Commercial Real Estate Services. I've been doing commercial appraisals for about 36 years and been with Bank of Hawaii for 21.
Okay, Lyon Dupre.
Good morning, everyone. My name is Lyon Dupre. I'm a commercial appraiser with American Savings Bank and been appraising since 2005.
Hey, Chris Ponsar.
Hi, Chris Ponsar, manager of Ponsar Valuation. I'm a commercial fee appraiser and been in the business 18 years.
Okay, Guy Churchill.
Yeah, hey, good morning. Guy Churchill here. I am in commercial banking at Bank of Hawaii and been in the business for about 15 years.
Awesome. Okay, so I'm going to turn it over to Mark Ambard, who's going to be moderating today.
Good morning, everyone. A great group. And I'm going to start this morning with Jay, who's going to maybe give us a little overview of his view of the commercial real estate market to start us off. Jay?
Thanks, Mark. You know, as I was getting prepared for today, got to thinking that a lot of us are kind of got the COVID hangover going on already. We've been in this situation for over, I want to say 75 days now. It feels like a little longer. And now we got some craziness going on the mainland, which we've all been paying attention to. So I thought I would change it up a little bit, make it a little more positive and a little more, let's say, inspirational on what's happening. So on positive notes on the industrial market, sales and leasing activity still continues. Our group, we've signed 4 new leases in the month of May. We have another 4 in the pipeline right now for the month of June. We opened escrow on 3 new sale transactions in the month of May. And this is all during the COVID pandemic. A couple of bright spots I did want to touch upon that does impact the industrial market as we go in through this is the online sales. Commerce has increased by 49% for the month of April. It's been driven by online grocery sales, 110% daily growth for the months of March and April. And electronic sales were up 59%, which leads me to believe that the leaders in this space have been Amazon, Walmart, and Instacart. And you're asking, how does this impact the industrial market? Well, a couple of things. I'm going to use the Amazon example. Current occupancy for Amazon fulfillment centers, they have 173 fulfillment centers in the United States, totaling 126 million square feet. They have slated to add 63 fulfillment centers, totaling another 40 million square feet in the next year and a half. Delivery stations total of about 213 units, 20 million square feet. They're going to add another 99 for another 20 million square feet. So total occupancy currently by Amazon right now is 176 million square feet in the United States. That's pretty significant, and it is rumored that they are looking to expand into Hawaii. Another silver lining that I wanted to talk about is health and wellness. And I thought I'd share a fun statistic with you guys because I think this impacted our little townhouse collection crew that we got going on in the Kakako neighborhood. Bicycle sales have surged over 50% in the month of March, 120% increase in adult leisure bike sales, and another 59% increase in children's bike sales. Everybody's going out and getting healthy, riding bikes, jogging, doing the fun activities that they should be doing with their families. And manufacturers have been running out of inventory, which is a good sign. Not so much for the bike sales, but it's pretty impressive to see that there is some healthiness and some good things going on. My buddy owns Surfboard Factory Outlet in Kapolei, and he told me that he had his biggest month of May in sales in his entire history of existing. So that's some of the positive things I wanted to talk about today, and I'm going to turn it over back to Mark.
Well, another positive thing, I had to rent one of my rentals downstairs, 4-bedroom house. We put it on the market, and within literally 6 hours, we had 15 inquiries. Nice. Unbelievable. And we rented it, it's done. So the market's, no one cares. It's all moving. It's all, we got exactly the price we wanted, everything else. Scott, what do you see coming our way as COVID starts to, it seems to me like it's falling off. I haven't heard a word about it since we started rioting. That seems to be the new it thing. Any effect, the two together, neither? Or is it just going to go away? And at the end of the summer, we'll have our masks off.
I think what you're going to find, Mark, from the appraisal perspective is that it's the data stream. It's still too early. I'm glad to hear that Jay is signing deals and entering escrows. Those are going to help appraisers provide a little bit more of the reliability in their appraisals. They're still guessing. And I guess what I'd like to say just to the users of commercial appraisal services at this point is that something happened in our market, and appraisers are required to address market conditions, Mark, and they have to address COVID-19. And if you're an appraiser that has to comply with certain standards and state certification law, think of it as an over-under bet. If you're asked by a financial institution to appraise something, are you going to say that things are better or worse since the pandemic was proclaimed? So every appraiser out there is looking at each switch and toggle and dial that an investor might look at. You know, what's going to happen to vacancy and collection loss? How's this going to affect their maintenance and repairs? Are we going to see, 3 months of abatements or deferrals or 6? So it's still too early to tell. On the industrial side, we are seeing transactions. And therefore, the price discovery mechanisms that fail in most other markets, hospitality, resort retail, are not impacting light industrial right now. And to the extent that other food groups are being affected, it's a matter of trying to apply general economic data, which is coming out from UHERO and DBET, to assess how bad we think this is going to get, or if it's not going to have an impact at all. It depends on the property type, and it depends on the size of the transaction. But I can tell you objectively, we're probably down maybe 30 to 40% in terms of appraisal inquiries over the past couple of months, but we're still doing deals. And in fact, I think Guy Churchill, you can chime in, Guy, we're seeing that there's still interest in acquiring and or refinancing commercial real estate debt at this point.
Hey, Guy, how's that going? People coming to you for low interest rates, or because the time is right, or they think business is growing? What does the bank that says no do? You're on.
Yeah, sorry about that. It's interesting, right? Because I think interest rates are certainly driving a lot of the activity. No doubt about it. Rates are as low as they've ever been historically. So that's a big driver. But I think, to Scott's point, I think the biggest challenge for us really is trying to figure out, with all the uncertainty, how do you underwrite new requests? There are a handful of new acquisition deals in the market that we're looking at, but overall volume is certainly down. And it's really difficult for all the banks to figure out, how's this thing going to look 6 months down the road or 2 years down the road. And with all that uncertainty, it makes it really challenging from an underwriting standpoint to, figure out what the right proceeds are, what's the right leverage, what's the cash flow going to be. So with all that, I think we're continuing to see a slowdown that we've felt over the past 2 months. We expect that to continue to be sluggish through the summer, most likely. And from there, we'll see how we emerge this fall, getting out of this thing to figure out what it's going to look like. But that's really where we're at.
Guys, before I kick off to Nathan, I had one question about pricing. I'm currently quarantined with a residential realtor of very long and vast experience. She, my wife, has noticed that prices are holding, and they're holding well. In fact, she's getting multiple offers above asking, but the number of inventory is way down. You'd think that makes perfect sense. Fewer houses, prices go up. Yet the buyers are coming in thinking they have deals and they're not getting them. Are you seeing that on the commercial side? Anyone, Guy, Sean, anybody can jump in on that question. I'm just wondering if you're seeing the prices hold, but the volume's way down, and if we see prices maybe dropping off down the line or going back up.
I think what we're seeing, and Guy may be able to speak to this a bit, but we've had a couple deals, Mark, believe it or not, that have actually, the appraisals have concluded markedly above the escrow prices.
Yeah, we're seeing that too. Yeah.
So to that end, you're absolutely right. Limited inventory. We're not, in the transactions we've been involved with, we haven't seen a lot of retrades. If you're a buyer, you're going to use your broker intelligently and trying to negotiate some type of retrade. But sellers are reluctant to do that at this point. I mean, they're working on the same information that we have. So we haven't seen any of our deals principally retrade. And again, we're hiring people to be unbiased and to give us their opinion. And I know of at least 2 occasions on acquisition transactions, the appraisals have come in above the PSA.
Interesting. Nathan, let's move to the legal aspect of things. What about liability for, COVID, for businesses that are reopening, or anything else you want to talk about?
Sure. Well, that's obviously a hot topic right now for.
Well, yeah, that's why I mentioned it.
And with the mayor's order actually saying on Friday that most businesses, especially ones in downtown, can open. I think everyone is currently consulting with their human resources professionals to see what types of laws need to be complied with. I would say generally that obviously the main thing is the guidelines. You have to comply with the guidelines, the mayor's order, the governor's order. Those are the crux for what you have to comply with. I think, I've seen, people interpret that in different wild of ways, to be quite frank, in terms of what is actually permitted, what's required. But I would say generally, the basic things of social distancing, having PPP available, doing things like putting in, protective barriers for workstations, stuff like that. There are definitely been a pivot in businesses in Hawaii that I've seen in providing different services. Businesses that have traditionally just been one particular business have now branched out into providing some kind of COVID-related reaction type of supplyware. So that to me is really interesting about how Hawaii businesses are definitely changing. But the main thing is that because it's such a unprecedented situation, the main thing is just looking at the guidelines and making sure that you're complying as best as possible.
Hey, Nathan, just real quick, have you been seeing an increase in traffic inquiries for your services from tenants trying to get out of their leases through force majeure clauses or go dark clauses?
Oh, definitely. I mean, I would say that the majority of requests that I've been receiving in the past 2 months have been along those lines, unfortunately. And every lease is going to be different in terms of how you view the force majeure clause and whether the tenant would have an argument. Generally speaking, those force majeure clauses are very landlord favored. And so if you have a force majeure clause in your lease, generally it would not allow the tenant to stop paying rent in the event of a pandemic or anything similar to that. If you have that kind of language in your lease, then the answer is the tenant probably is not going to succeed in an argument to get out of the lease. If your lease, on the other hand, does not have a force majeure clause, or is not broad enough to maybe encapsulate a pandemic, then the issue is the tenant may have an argument at that point to say that there is a impossibility or frustration or purpose, which are common law doctrines in Hawaii and elsewhere, that would allow you to actually rescind the lease and stop paying rent. But the bottom line is that it's a very fact-intensive analysis. It will depend on how the lease is structured and worded. And generally speaking, I'm not seeing a lot of lawsuits right now where tenants are trying to get out of the lease. And I don't think that landlords are particularly too hot on the idea of taking their tenants to court in this current time frame.
Right.
So, you know, most of these types of situations are being worked out, you know, via some kind of deferral. And, you know, that's the most of my inquiries is deferral. As a landlord, you know, the abatement is really I actually haven't even seen an abatement being agreed to before for a landlord. And so it's going to be at some point when you have all these deferrals, and it's going to come up in, you know, and July 1st is when a lot of these deferral agreements are going to start having your payment of back rent. At some point, it's going to come to a head as to, you know, how are these businesses going to survive with the back rent being so much. And oftentimes the landlords want to have the back rent paid the same calendar year for tax reasons. And so, you know, bankruptcy is something that a lot of clients have reached out to me. Their tenants are talking about bankruptcy, and you see it in the news nowadays, like Hertz and 24 Hour Fitness is threatening bankruptcy. So those are going to be hot button issues for the rest of the year.
Thanks, Nathan.
Can I chime in a little bit on that? Scott,
Please.
you brought up a go dark provision there's conditions to when you can go dark, which basically revolve around the continuous operation clause that's in the lease. And most landlords want you to continuously operate, which means you have to stay open. You cannot close the store. I would say larger tenants have no continuous operation because at some point in time with sales, it makes more sense to close your store and just
Right.
pay the rent because you're losing more money by staying open. But those quote unquote go dark provisions are pretty rare, and they have you know, they have conditions around them as to why you can do that. The other hot button out there that I think is coming into play more is the co-tenancy, where if certain stores close, then you can close. But not everyone has this in their lease, and then those stores have to stay closed sometimes for 3 to 6 months before that kicks in. So if they're closed for 2 months, there's no co-tenancy issue there. But you can bet that the big box stores know exactly when that clock started ticking, and then they're going to have to go to guys like Nathan and say, hey, they had to close. It was an order, so there's going to be that whole. So.
Well, thank you, Roger.
All right.
You know, that's why I wanted to bring it up, because I think that going forward, we always get asked, what's happening with retail values? Well, if you're looking at a leased fee on a 50-tenant retail center, the question from an appraiser is going to be, what are the co-tenancy clauses? What are the go dark clauses? What about force majeure? So it's not a very, we can't just come up and say it's a 10 to 15% downward impact on price without knowing a lot about the leased fee estate. So I think answering those questions is a super important part of our job.
I think we're checking off the boxes like force majeure. I mean, that was hot like on our last call, but I really don't think that's going to come into play.
Right.
And so I would say that the lease issues that are going to allow a retailer to close its stores are minimal, unless they're a very big, powerful national tenant. And what Nathan was talking about is what everyone's negotiating now is they just want deferrals on their rent or abatements on their rent. We're really in the here and now, and no one really. Don't have a lot of tenants who are saying, well, let's look at our lease long term. They're just trying to figure out how to stay afloat now, and then maybe we'll get to that.
A couple questions from the folks that are watching. One, everyone's assuming, I got a question here, that industrial rents, that prices and everything are going to go down. I've got a question here. What's the % reduction in net rent for industrial, office, retail, multifamily properties? This is from Robert Okubo at Hawaii National Bank. Everyone thinks rents are going to go down. Everyone thinks prices are going to go down. We were talking earlier a moment ago, prices haven't gone down. Our rental guys, Roger, Jay, Sean, are they holding? You seeing an overall drop in rate? Is a good property still getting a good price?
Yeah, on the industrial side, I mean, we're getting the same rates that we were getting pre-COVID. So nothing's changed on our side. On the leasing activity, has been swift, and if you got good product, you're going to get good rents. And I think the demand is still strong enough for industrial, but there's a lack of inventory going on. So it's still kind of impacting our industrial market for sure. And we haven't been budging too much. I did get a call though. A guy wanted a real steep discount and called the landlord. The landlord's now, I'll take a risk. I'll wait. I don't want to play that game.
Right. Why would a landlord give a abatement to anyone right now in Hawaii? We just haven't had that many issues. 17 dead. We haven't had any riots. Sean, office, what's up?
Yeah, the office sector, the office sector's fared pretty well. So nationally speaking, it's about 94% average on the rental recoveries that they've received the past 2 months. I think Hawaii is trailing right behind that. So we're only probably 3-4 points below what the normal vacancy loss is, or actually rent loss is. I don't see any rent reductions yet. I do agree with Scott in terms of that we are going to see at the end of this month when the PPP money runs out. I think that's all keeping afloat some of the rents for the office sector, and we may see some companies start to downsize and take advantage of restructuring their leases, but we're not seeing that yet.
How's the vacancy thing for office going to go? I mean, up until COVID, office was getting more and more vacant. Now we had COVID. Everyone goes home, says, wow, we don't need an office. We can work in our t-shirts. We gain a few pounds when we get work done. Problem with working at home that you guys don't know, as someone who's worked home for 25 years, if you work at home for a big company, you can kiss promotions goodbye. Because if you're not in the mothership, they don't know you're there. So you better own your own company if you're going to be at home. Sean, what's going on with vacancy?
Office vacancy actually decreased over the past 18 months due to that one office building, 1132 Bishop, being taken off of market and converted to a residential. So we went very drastically from about 17% vacancy down to, call it, depending on who you're talking to, 10.5 to 10 to 10.5% vacancy. We do foresee over the next probably year that that vacancy is going to rise by a couple of points, but not dramatically. The office, what everybody's working on right now in the office sector is how to get people back into the buildings. With social distancing being the way it is, you can only get possibly 2, maybe 3 people in an elevator. And if you're looking at a high-rise office tower of 30 feet, or 30 stories, back of the napkin calcs, you're looking at about 10 hours to get 700 or 800 people into your building. That just doesn't work. And so how do we do that? How does that work? How does that happen? We're talking about a lot of pendulum swings, and I think knee-jerk reactions are going to happen. I think the pendulum is going to swing for people to start looking, or companies to start looking for, from going from urban, which has been the hot button across the country, now looking at suburban office market and suburban living, and what is that non-dense kind of, not the reducing the density. How does that help with possible ending this pandemic and future pandemics or future occurrences to happen? So I do foresee a swing towards the suburban office market getting a little bit more hot. But then once we have a virus, a cure or a vaccine for this, I do foresee a kind of pendulum swinging right back to urban living and urban office core again. That may take anywhere from 36 to 48 months, but that pendulum I do foresee swinging back. I don't see the millennials, and it may be more of a price issue, but I don't see millennials wanting to live in the burbs just yet.
Hey, Lyon, I had a quick question. We were chatting, Mark, I was chatting with Lyon earlier this morning offline. Can you talk a little bit about, you're still seeing construction activity on the apartment market right now? I mean, that's somewhat of a bright spot.
Yeah, we have at American Savings Bank, we have in the pipeline a couple of proposed multifamily projects for rent that are making their way through the process, and with the developers proceeding forward. So, I mean, it's a positive sign that construction activity is continuing to move forward, and the appraisals are coming in and supporting that activity. So that's, I guess I'd like also to take this time. I want to thank everybody in our real estate community who are part of this call, because if you've read any recent appraisal reports that have come across your desk, they are replete with great market participant interviews, and the reliability of the report only come from everybody sharing what's going on in their world, so the appraisers can report that in the report. So if you go past the first page and you read past, the value conclusion of the property, you'll find within the contents of the report some really great summary of feedback from multiple market participants that the appraisers are out talking to all the time. It's a great guide. So I just want to thank everybody who is a part of our community, who's picking up that phone and calling that appraiser back and sharing that information, because it's critical. It is absolutely critical for us at the banks to make our decisions on going forward with deals when we have that greater transparency in the market. So.
Get that, everybody? No more shining on the appraisers. Talk to them, even though it's a 2-year-old deal and you don't even remember the file. You talk to those appraisals that give you a call and ask you that when you're driving the car in the Jack in the Box, and they start hitting you with the hard questions. So you don't forget to help those appraisers, because we love them.
And
Hey,
right.
Chris,
report.
This for Chris Ponsar. Hey, Chris, can you talk just real briefly on how many people you surveyed for that recent assignment for us on what's the COVID-19 impact been? How many would you talk to? 17 brokers?
Oh, yeah, that's right. 17 people, not just brokers, but we'll talk to
Market
property managers, we'll talk to property owners, investors, that sort of thing. I mean, what I've often said is that there's 2 ways to be a really great appraiser. One is to look at all of the available data and crunch the data and understand the data and analyze the data better than anybody, which you can do from your desk. The second way to be a great appraiser is to talk to absolutely everybody who's done anything with that property type or location. And if you do that, you'll have a pretty good answer at the end. The zen is to do both. The zen is to crunch the data and talk to everybody so you can understand how it works together. But right now, with a lack of post-COVID data, we're relying more and more and more on that touchy-feely, but interview market participants to see what's really going on. And in a way, this is the broker's time to shine. And what I mean by that is the criticism is always that appraisers, appraise from the rearview mirror because we're always looking at historical data. But right now, I think appraisers are strongly influenced by not BS, but true stories, war stories about what's going on in the market. Mark, one thing that you had mentioned before was about price not dropping. What we're seeing.
Well, I didn't say it hadn't, but I don't know what you say.
Right. So even in the industrial market, which is definitely the Cinderella of the commercial sector, not too long ago, we were seeing not only prices increasing, but multiple backup offers, signed backup offers. We got people in line, backup offers at even higher prices. Those days are pretty much gone. Or if backup offers exist, they're usually a good clip below the current contract price. So, it's from a market value perspective, it's true you only have to sell the property once, but where there used to be a feeding frenzy for Oahu Industrial with 6 or 7 folks chasing after the one deal out of raw scarcity, we're not seeing that anymore.
Okay. Let's move this.
We talked about once. All we need is one, right?
That's right. Well, and that's the other thing to think about from a bank's perspective is the brokers only need one, but the banks kind of need 2, because if the borrower doesn't pay their bill, they got to sell it again. And so, it's a real test of the depth of the market. And I imagine, but I'd love to hear from the bankers, that it's a scarier proposition if you think you might only have one buyer.
Yeah, no, that's absolutely true, Chris. No doubt about it. But I do want to add one thing on the appraisal piece for all you borrowers and investors out there. The one advice I would give you is, because this is one of the biggest mistakes I see, is to be sure to give the appraisers the time of day and give them as much information as you possibly can. Whatever they ask for, make sure they get it and they get it timely. Because what happens is appraisers, if they don't have the information, they have to make guesses, right? And typically they're going to err on the side of conservatism. And so it really behooves you to come up with, to come up with the right fair value for your property or your investment. Take the time to give them everything that they're asking for. It'll make a difference in the long run. So that's one advice I'd share with everyone.
The other thing I would say is that very often when we're asking for data or information and we're getting resistance from property owners, appraisers, the job of an appraiser is dealing with people trying to influence you. That's what we do. So that's not new. But what I find is there's very often property owners who are withholding information, I'm guessing because they're trying to influence the outcome, but they don't realize that I'm actually trying to help them by getting rid of uncertainty, because where there's uncertainty, right, I'm not putting my company or my reputation or my family on the line for an uncertain thing. I can deal with certainty.
All right, let's talk a little about what some folks want to hear a little about the future. We'll start with Guy. I just want to hear interest rates. Up, down, sideways, where are they going? What's your opinion? We realize no one knows. But,
yeah, and I've been as wrong as anybody on predicting rates, so maybe you shouldn't listen to me. But I can't see a scenario where rates are going to go up
right.
for the future. So I see a pretty flat range, Mark. I mean, for the last 2 months, and I would expect that, to continue, certainly both on the short term and long term into the rate range. A pretty low interest rate environment for, could be 3, 4, 5 years.
Still affected by the 10-year? The 10-year movement affects the 30-year fixed, and those two still have some connection, or has that been broken apart?
Yeah, I mean, I think there's certainly some connection there. And a lot of it also depends on what, what the Fed does with short-term rates. It all kind of works together. But just given the, the magnitude of this economic impact, I just don't see a scenario where we're going to see any meaningful uptick in rate, again, both on the Fed funds side and also on the 10-year.
It's the new normal.
Yeah.
Roger Lyons, unmuting.
Yes.
Retail, the big question, all affected by the tourism, our 40% drop in. What's going to happen to retail, Roger?
Well, I'd like people to go down to Waikiki and stand on Kalakaua and Seaside, which is about the 50-yard line, and ask yourself, are rents going to go up or down? And I just don't see any other way but some at least short-term correction until we get the tourists back. We need to get the tourists back. I don't know if that means 10 million but that needs to come back, and there's a lot of factors at play there that we could get into in a separate call. But my opinion is retail rents had run up some, and I think we're gonna see a decrease. Hawaii's ace in the hole, as far as certainly from the landlord side and from a rate perspective, is we don't get overbuilt here the same as you would see in maybe the Southwest or other areas where you have tremendous overbuilding, and then a situation like this comes up, you're going to see a crash. So we're not going to see a crash, but there will be some correction, in my opinion. There's going to be a contraction in the number of stores that operate. Remember that retail is a sector where basically, we had to close. We had to close the stores. They were not essential. And then even in some stores, you would go in the store and you couldn't even buy everything that was in the store because it wasn't essential. So I'll be the complainer here. We in retail were hit very hard. We're opening up now. I walked around a number of shopping centers yesterday, and the distancing measures that are in place that can be talked about separately are, you can't have more than 1 or 2 people in a store. So there's lines outside of a store. and I don't know how long consumers will go for that or continue to use that. So there's some significant challenges to retail getting back, and more so than any other industry, retail rents should, in theory, be tied to the sales performance of a store. And retailers can only pay so much in rent to operate that store, at least at some sort of profit. So it stands to reason that they're not making money right now, so they can't pay as much rent. So this is to be, this is the next chapter after these abatements and after the deferrals, et cetera. What will happen?
Hey, Roger, can you speak to the bifurcation between domestic retail that's got a grocery anchor and resort retail, and how you see those two markets? Because I don't think domestic has been affected quite to the same extent. If you have essential industries, you have a grocery store, you have a pharmacy, relative to something on Kalakaua.
Right. Well, the resort market here is, we only have to look at 30,000 visitors a day down to a few hundred a day. The resort market, I don't want to, I'll try to be as non-dramatic as possible, but it's been decimated. And for that to come back, for those people just to take the boards off their store, interesting, right? We had boards up on our store in Waikiki for a different reason than what's happening now. The resort market is going to take a significant more amount of time to open up, and for us to figure out where the rents make sense and how to structure these leases going forward. The suburban centers, grocers, people who've been selling groceries and general merchandise, pharmacies, they have been doing very well. I'll tell you that typically the grocery items are the lowest margin. So just because they're doing giant volumes does not mean they're making that much more money. It's a good thing, but again, it has to be tempered in that way. And yeah, you can have your grocer doing a tremendous volume, but 10 stores away, the clothing shop, that doesn't necessarily translate into, solid times there. One of the things I've been saying for the last month is any retailer who has more than 4 stores is probably going to close some of their stores going forward, because what they've realized now is more than ever, every store, every location has to stand on its own and make money. And I think what we will move back to in the shopping center industry is what it was based on in the beginning, and it's a partnership between the landlords and the tenants. I can tell you that every retail landlord I know knows their tenants better today than they did at this time last year.
Hey, Roger, to
they've been talking about that.
We, I also do a lot of healthcare brokerage, and we've been looking at, meaning my clients have been looking at a lot of retail in terms of moving from traditional medical office to taking a page out of the retail sector and really getting some frontage and visibility into for their services. So, nationally, the stats right now are looking at about 25% of all retail has some sort of office, some sort of medical use in it. And so I represent Kaiser across the state here. And for the past 5 years, we've been trying to pull a page out of the retail sector to try to get as many of our clinical uses front and center in terms of getting some visibility and signage and so forth, and trying to act as a retailer. Again, parking is good, tenant interaction is good, and the patient experience is good. So that's a little bit of maybe a little bit of a silver lining for the retail moving forward.
I agree with you, and occupancy is going to be a big issue to landlords. The medical use is good from an occupancy standpoint. However, you say great parking, and my tenants say, no medical use near me because those guys come in and they take a parking stall for 2 hours. So, you know, there's that balance there. They do bring traffic. I think we've seen certainly the dialysis use, and we've seen more, you know, dentists and some of those types moving into the retail industry. But I think without doubt, you're right. It's a big opportunity for medical to get better exposure and access through retail properties because there's going to be space to rent.
And I think it's a lot of
something
concern.
you can't just, oh, I was going to say, Sean, it's also something you can't destroy with Amazon.
Certainly. It's been a tough one for a lot of national office, medical office users who are losing occupancy to a lot of the retail centers.
Going with the urgent care model.
Correct. Urgent care has been kind of a winner here.
Right.
It's really, yeah, it's really taken off on the mainland. We're just following trends from the mainland, but they're actually, for a lot of the urgent care centers, they're just going ground up because they have the land to do so in a lot of the mainland markets.
Nathan, are we going to see a lot of lawsuits? Or are we going to, what's the future of the legal aspect of this? Are you going to be much busier for all of this activity? Or are you going to end up getting a PPP loan because nobody's suing each other?
I mean, I definitely think it's going to come to a head, like I said earlier, that landlords are going to have to make a decision about whether it's worth it for them to try to sue their tenant to get back rent and terminate the lease. Obviously, you know, there are legal fees and costs associated with doing that. And, you know, and oftentimes these tenants, frankly, don't have the ability to even pay a judgment. So that needs to be part of your analysis about whether you're going to sue the tenant. As I said, you know, the current environment is that, you know, where landlords and tenants are trying to work things out. But, you know, the options for the tenant are, you know, like, you know, bankruptcy, as I mentioned, try to get an abatement or reduced rent. But, you know, it also depends on what options there are for the landlord out there. You know, if there are tenants that are going to be willing to relet, you know, under favorable terms, and obviously that makes their decision a lot more clear. But I do think that the lawsuits and the bankruptcy proceedings are going to increase dramatically. You know, a good amount at least for especially the really gigantic leases with huge rents. That's going to make it a really easy financial decision for the landlord to try to pursue something. And so that I expect to be, you know, really front and center later this year.
What's the fastest way to get a tenant out rather than sue them? I mean, you sue them, it takes 6 months to a year. The tenant's in there, they're not paying, they have no money, they leave, and you're left holding the empty bag. I'd rather get them out in 2 months, even pay them 2 months to leave. I'm only holding a 4-month bag instead of a 12-month empty bag.
Right. The timeline depends on how much the tenant is going to fight it, of course. Oftentimes tenants just default because they don't want to fight it and they don't appear, and that can take actually a pretty short amount of time. The courts have adjusted trials, you know, in Hawaii for pushing them out. But, you know, I think trials are going to start to happen again in the near future. And the court is still accepting complaints for summary possession. That's still ongoing. Certainly there isn't going to be an associated delay given that there are, you know, limited in-person hearings these days. But I do think that, you know, for a landlord, you know, there is still the possibility to get them out quickly. It just depends on how much a tenant fights and what kind of damages the tenant's going to try to claim, and if they're going to also assert, you know, things like force majeure and you know, any other types of arguments that, you know, really are very landlord favored. But I still think that there could be some sympathetic judge in Hawaii that might say, well, you know, this is a pretty unprecedented situation. You know, we're going to let you out for this particular lease. So it just, you know, it remains to be seen. But like I said, that's going to really heat up. Interesting.
Mark,
Jay,
can I
yes.
can I comment? Can I comment?
Of course.
And I think it's getting back to knowing your tenants. If you're a landlord and you got a shopping center and your tenant has 27 months left on their lease, and they come to you and they say, I can't pay your rent. You know, what am I going to do? You can, or they stop paying your rent. You know, when you factor in the releasing cost and you're going to go after them to try to get your rent, and that's going to cost you money with the attorney. It's going to cost you brokerage fees when you release the space. The space will be vacant for a period of time. The new tenant may want build out time. I mean, you might be talking about the equivalent of 10 months of rent to get all of that done. And you've got 27 months left on this guy's lease. Wouldn't it behoove you to say, I'll give you 6 months free rent right now?
Yep.
Or defer it or something. So I really would, I would urge everyone to look very closely. And then what's the impact of that tenant leaving? Sometimes it's a good idea for them to leave, right? The other flip side of it is if you have a property that has some redevelopment potential, yeah, you might want to get rid of these guys. So it really comes down to a very case by case basis, but look closely at the costs of releasing your space, because that might be a simple 2, 3, 4 months of free rent. And I know it's hard. It's harder. Maybe you go to half rent, or maybe 1 for 1, 1 month now and 1 month at the end of the lease, and you do it that way, where you can spread out the pain. Or landlords say, I'll give you 2 months, three months free rent now, but you got to tack on 3, 4 months to the lease term. So there's a lot of ways to skin it.
Free rent's always an interesting concept, because until there's someone who wants the space, it's vacancy. Once they want the space, it's free rent, and all of a sudden it's worth something. It's literally minting your own money to create stuff to make your deal with.
And it's free rent. When I talk about free rent, I'm talking more base rent.
I know.
I mean,
you want to get all your CAM and stuff.
If you get your CAM charges paid, that's a big plus.
That's a big one. That's a big one. Yeah. Excellent. Jay, you've been sitting there not talking a whole lot about what's going on. What do you think would you rather have vacancy or a tenant in place in industrial? Roger's told us that in retail, that 10 months, you're looking at a year if you get a vacancy. I've always told my landlords, as a rule of thumb, you get a vacancy on a good property, all things considered, you're talking 6 to 8 months of costs. Retail's more like a year. Would you rather have a vacancy right now if you were a landlord, or would you rather have a tenant who's not paying that you could, a good tenant who's not paying come around?
Well, you hit it on the spot. That depends, right? If I got a bad tenant that's been trouble and he's not paying, I'm more inclined to want him out and find a better tenant. So you kind of have to weigh those options and kind of weigh that situation. I've been quiet because I've been listening to Roger. I mean, there's a lot going on in the retail market.
Oh yeah,
and
Roger's the one.
I'm going to assume that some of that's going to spill over into the industrial market somewhat. And when I say somewhat, I mean there's distributors and distribution companies that pretty much service a lot of the restaurant industry in Hawaii, and those guys are getting clobbered right now. We've gotten calls from several of those larger tenants, refrigerated storage, food distributors that are suffering, that don't have quite the staying power to make it past PPP when that money runs out. So those discussions are happening. Luckily, they're a small portion of the larger, broader industrial market in Hawaii. Dry goods guys are still getting pummeled too. So, I mean, there's a lot in the industrial market that we're not seeing surface just yet, but we should see some of that happen towards the end of the year. That being said, though, inventory has been traditionally low, under 3% for the last 10 years, which is not a normal market per se. I would like
for you.
Vacancy rates in 5% are a little more normal, gives people more options, but we've been blessed having a low vacancy environment for a long time. So a little bit of that loosening up might not hurt the industrial market when you have tenants that need to expand and get into bigger, better places. I do agree with Guy and Scott on the volume of transactions is going to decline this year. We are going to see that trend continue, but I do think a lot of that volume is going to continue in the industrial sector, much of how it has been it has been going on for the last 5 years. And then another point to touch upon, besides just the appraisal market or the value of the property, is also the strength of the borrower. When we're advising clients, we kind of want to know how strong that client is and how strong that client's going to be going in the future. So I think that kind of dialogue you got to have as well as a broker too, and kind of looking forward, that strength of the borrower is going to make a big difference today, a lot more than it did before. A lot of guys were getting by with some skinny skinny financials because they had SBA financing involved and whatnot. We're going to see that kind of slow down a little bit. We're going to go to the guy that has a big balance sheet, has the capital to cover some cost, it has some staying power. We're going to see that continue, that get to be more front and center. And then, we didn't touch upon the vulture market, right? I mean, there's guys on the sidelines calling me daily with large bank accounts, huge sums of cash, wanting to find good deals, but the reality is they're not surfacing today. We're going to probably see that surface maybe third, fourth quarter into the first quarter of next year, depending on how quickly this tourism market responds. And, I've been hearing rumors that they're not going to open up flights to Honolulu or to the state until the end of July, early August. So every month that we're down on the tourism side, how many years of recovery does that take? I don't know, but that's going to impact our local markets here for sure.
Jay, I wanted to jump in a little bit on what you said about the pricing.
Yeah.
When you look at 2008, the real low prices didn't manifest themselves the bottom of the market until mid 2010. And so it takes a long time when demand dwindles for the sellers to finally either come to the realization that prices have dropped or be financially pushed into a corner enough where they have to sell, because no one likes to sell at a loss or no one likes to sell for less. But and another thing that's kind of happening right now, we talked about it before the call, I think we're still way too early because of all the stimulus money that's in the economy, all the PPP stuff, all of the unemployment stuff. I mean, one of the jokes has been the reason that they won't be reopening flights until August is because the hotel unions want their people collecting the extra money through the end of July. I mean, my wife is making on unemployment 3 times what she was making on having a part-time job previous to this. So I'm kind of liking her being unemployed at the moment. So I think there's some, if the stimulus doesn't get renewed, and it's really going to be August, September, October, where the potential for people to really have financial hardship to hit.
Yeah, it's not going to happen until the later part of this year. We're not going to see any of that shake out just yet. And yeah, I mean, I've been hearing the same rumors that the unions want to keep people unemployed for a little while longer. Unfortunate for us, I've been taking advantage of the silver lining of having an empty Waikiki, riding bikes through Waikiki on Kalakaua, coming back down on the Alawai, and not having a whole lot of traffic to worry about. But we have seen some crowded beaches lately, which is kind of cool. Not so cool for me, but I mean, it's been nice to see people back out again.
Hey, Jay, in the beginning of the phone call, did you say that you just recently completed 4 sales?
4 leasing transactions. I signed it in 4 leasing transactions.
4 leasing transactions. Yeah. And were those people that...
Jay's and my sales typically take 3 or 4 years to close.
Give us all the bad ones, Mark. Come on.
It's incredible. Surprised Sean doesn't bring you any anymore.
We want the good ones. Stop it.
Were those downsizing plays for those tenants, or expansion, or any I guess was any of the leasing activity in response to COVID?
No, so I had a contractor, out-of-state contractor, new to the market, government related. So that was one of them. Then we had a business unit that was sold, and the new ownership needed to relocate their facility. So we did that lease as well. And then the other 2 were just new leases, guys looking. Now, granted, they're all over the spectrum, small, little, medium. A couple of large requirements just came through the pipe recently. So the activity is still going on. And I think it will continue just because of the lack of inventory, and there's still some sectors in the market that's doing well. So that's a bright spot in the industrial market. But we're not going to be able to trend and see any real pain yet until this stimulus runs out. And I mean, there's quite a bit of stimulus going on, and as the feds have said, they're willing to put more out there just to keep it propped up a little longer. So I don't know, man. This thing is just it gets kind of unknown, uncharted territories, not like the last one where it was a financial meltdown. You had CMBS debt that was going bad, people bailing out of their houses, giving the keys back to people. It's a little different this time around. So it'll be interesting to watch.
Hey, Lyon, the good thing about leasing is that lease expirations don't give a rat's ass about COVID or pandemic or riots or anything. Lease expirations come and go. And so people are forced to do something. They can't just kick the can down the road continually. So a lot of landlords are spinning it in a really proper way of saying, you're in an enviable position having your lease coming due now, because now you can get concession. Now you can get maybe a couple of months of free rent. Whereas if you're in the middle of a lease transaction and you're begging for some forgiveness, they're not giving any abatement. It's purely just deferrals and reallocating the rent structure. So those who are coming up for renewals are actually in a pretty enviable position where they are getting immediate relief in some cases, and probably more than they would have normally. And so that's been interesting. So I've had a lot of lease transactions occur over these past 2 months. Some are already in the pipeline, but a couple are brand new. So it's been really busy on the leasing front.
Yeah, I'll make a comment to that too. And Roger, you can kind of help me out here. I recently read, well, I was trying to help a friend do a resort retail workout with a landlord, and they were very stingy. They were not willing to give much. I mean, they offered him a 20% reduction in rent, and it was all hotel driven. And I told my buddy, I said, I wouldn't sign this if my life depended on it. I'd rather default on my lease and let them take action that way, because the hotels are closed, and how can I reopen my business? And you're going to give me a 20% deferral. I'm in a rent reduction, but you want me to pay it back come January 1st. It was a very stingy type of renegotiation by the landlord, and they're doing that to all their tenants across the resort, the resort tenants that they have. So I don't know, are you experiencing that, Roger?
Yes. Resort retail is in a very unsure place right now. I will say, from the landlord standpoint, I know that, you know, some of the hotels in Waikiki are on ground leases, yeah, and they've got a mortgage. So they have two parties that they're going to. Those may or may not be working out. Personally, you know, I'm more of a tenant rep person. I don't know how you can pay rent if your store's not open. I mean, how can you expect that to happen at least more than a couple of months? But it's certainly not going to continue. In the hotel. Yeah. So, but you know, the hotels have their obligations too. I do think that Nathan's you know, the attorneys they're just sitting there kind of in idle right now. I think that there's going to be, well, maybe not litigation. There's going to be a lot of billable hours, because people are going to, yeah, they're going to want to know, like, what are my rights here? And from both sides. And again, I just really think it's going to come down to the balance sheets, how the quality of the tenant, I mean, let's face it, the landlord, the compassion of the landlord. I mean, there's so many things that are going to come into play here. And I think this pushes back to something we talked about. Folks, we got to get these hotels open, period. For everyone on this call, we're all related. I don't think that means we're going to get back to 10 million, but we better get them open, and we better get some people back here, and we better figure out how to do it in a way that, you know, is sustainable. You can't have a hotel expect to open at 20% occupancy. You know, that doesn't, we all know that once you get below 60-70%,
there's no money.
You're not making money. So what do we do? I think that we're really in, but for the here and now, I don't know what to say. I don't know who's right and how it's going to work, but long term, we need to get them back open.
Or Airbnb will come back, and they'll be far more nimble, and they'll get the customer.
You know, what does that mean? I mean, what's the resort? How is the resort industry going to move forward in terms of rooms, places for people to stay? Is it better to go more heavy into the Airbnb? Is it better to have none of them and force the hand back to the hotels? So
yeah, but then
there's
the
gonna be a
hotels
lot
have the unions, which keep them closed, which keeps everyone down. If we had all the Airbnbs, we might be seeing a faster recovery for some of the retailers.
Do you want?
I'll tell you right now, but
We're going to get political on this one, and we can take this one so far over. So we're going to have to set it down. But it would be fun to jump into, wouldn't it?
Can I say one more thing from the retail side?
Of course.
Completely unrelated. Restaurants are going to be reopening very shortly. Please
go
to a restaurant and just deal with whatever it is that they are going to be. What I don't, if you like CPK, go there. I would advocate to go to local restaurants, but please, the restaurants have been an amazing story in trying to stay open and doing takeout food. I mean, you talk about watching someone fight for their life. I mean, really, it's been the local restaurant recently doing whatever they can. I mean, some of these restaurants you can go and you can get a cocktail to go. I mean, they're trying to get creative. So I do want to put a plug in for the restaurant industry, and please patronize them.
To that effect, Chris has been doing all takeout on all of his COVID experiences.
True story.
Great.
Story. Yeah, Chris has been a big component of the restaurant business.
I got 14 pounds of proof.
Get on Hawaiian Airlines too. Go to the neighbor islands, support them, because I'll tell you right now, the airlift issue is going to be the single biggest issue in our ability to recover from this, because a lot of flights aren't going to be returning anytime soon. So the time period to ramp up all these different airlines, adding more lift to the islands, the sooner we can do that, the better. And it's going to take a long time. So we've got to support the airlines.
That's what was identified as hampering our last recovery from the Great Recession, as we lost lift.
While we're plugging local businesses, I'd ask everyone just to order a commercial appraisal today. Anything you can do to help the local appraisal community is much appreciated.
With all cash, Chris will give you a discount.
Yeah.
Hey, buy a warehouse. I'll order an appraisal.
Okay, you guys, it's my turn. We're a little bit after 12 o'clock. Any last words from our speakers today?
I'll make one comment to the restaurant thing. Do it now before July 31st, because it's the safest time we're going to have to go to a restaurant until the visitors come back. So if you're going to do it now.
Also, we've started this on April 15th. We've been going every week, every Wednesday at 11 o'clock. I wanted to especially thank Mark Ambard, who has been moderating every week. Jay Elicker, who has been with me since the beginning. Thank you, you guys. I wanted to do a quick poll. This is supposed to be our finale, and this is not going to go on weekly, but I wanted to look in the chat, like in your chat, and just say, take a vote. If you want this to continue, I may continue it like once a month. But if you can all join the chat and type in, like if you wanted to continue, say yes. All you have to say is yes or no. Just take a vote. And also,
looks like we're pretty strong on the yeses. I'm thinking of typing a no just for fun.
Okay.
Thank you all, by the way. Thanks to everyone who's writing yes. We really appreciate your watching and supporting us in doing this. Thank you all.
Yes, and from Fidelity Hawaii Connects, on behalf of all of us from Fidelity, we wanted to thank all the speakers, all the viewers for joining us today. We put this all together to keep you all connected, all informed with all these diverse speakers, all this intelligence, this really good knowledge. And, we would appreciate any business that you can throw our way. I mean, we're happy to assist you on any of your title escrows, like Scott, Mark, right? Everybody who's, kind of plugging in themselves. So I wanted to plug in ourselves too. So on behalf of Fidelity, thank you. And if you can throw business our way, we're happy to be a resource for you, help you in any way possible. So thank you again, you guys.
Thanks, everybody.
Safe. Let's support our restaurants
great round table
and
today.
support each other.
Thanks, guys.
Everyone.
Bye.
Aloha.
Aloha.